Zimbabwe, banking tremors as major distributors face frozen accounts TLDR. Over the past weekend, 4 major Zimbabwean goods distributors encountered the freezing of their bank accounts as the Minister of Finance and Economic Development, Nube, warned of similar actions for others. This move is an effort to tackle price hikes and artificial shortages caused by unlawful diversion of goods to foreign currency-only retailers. The situation has raised questions regarding the integrity of the value chain, from manufacturers to retailers, and how transparency can be achieved. In Zimbabwe's transition from a banknote-based economy to an electronically based one, tracking the money flow is easier. Yet, with this system, the lines of ethical and legal business conduct often blur. Account freezing doesn't eliminate the funds but requires detailed explanations for business transactions. Honest businesses affected by this may find the process irritating, but not disastrous. However, those involved in fraudulent activities face severe consequences. These events highlight the ongoing struggle for financial transparency and the ethical dilemmas surrounding economic policy enforcement. Amidst the growing digitization of transactions, Zimbabwean authorities are demonstrating their resolve to mitigate economic disruptions caused by speculative practices and unethical business conduct. In an unprecedented move over the past weekend, 4 major goods distributors had their bank accounts frozen. Minister of Finance and Economic Development, Nube, did not mince words about more potential enforcements in the offing. But, why has this crackdown become necessary? And what implications does it hold for businesses and consumers alike? Unraveling the root cause of recent price hikes and artificial shortages, it appears that a significant contributor is the unlawful diversion of goods to foreign currency-only retailers and tuck shops. Could this scenario have been prevented if there was better scrutiny of the value chain, right from manufacturers and importers to retailers? While it's tempting to place blame solely on the final retailer, there's a need to evaluate whether the fault lies higher up the chain. What if the retailer is just as much a victim as their customers? This crisis poses questions around the ethics of business practices, painting a complex picture of an economy in transition. One of the advantages of Zimbabwe's shift from a cash-based economy to one largely reliant on electronic transfers is that records are automatically created in banks and money transfer services. This new system facilitates the Financial Intelligence Unit of the Reserve Bank of Zimbabwe to monitor the money flow and detect any potential irregularities. But how effective are these measures in combating unethical and illegal practices? Freezing bank accounts doesn't wipe out the funds, but rather imposes a requirement for detailed explanations before any transaction. For honest businesses inadvertently affected, this might be a frustrating hurdle but not a catastrophe. Meanwhile, those with nefarious intentions may face significant difficulties in carrying out operations. Should this potential disruption to honest businesses be seen as collateral damage in the fight against fraud? Or can more be done to distinguish between the innocent and the guilty? Historically, tax investigations have proved to be potent tools for combating financial crimes. A notable example is American gangster Al Capone, who was ultimately incarcerated not for his infamous criminal activities but for tax evasion. As part of their probe, Zimbabwean authorities have also roped in ZIMRA, Zimbabwe Revenue Authority, to scrutinize potential tax evasion practices. But will these efforts yield the desired results, or will they only further entangle the innocent businesses caught in the crossfire? In a rapidly